Hello guys, welcome back to my channel. In today's lesson, we're going to do a follow-up video of the previous lesson. So on this video, I shared how to identify or to read the context of the market structure shift. So whether the market structure shift is just a short-term shift to mitigate a zone below us or above us, or it is the one that's gonna change the entire trend, right? From bullish to bearish or from bearish to bullish. So this is a very, very important concept that you need to be familiar with. If you didn't watch this video, I strongly recommend you to check this out, all right? And on today's video, I'm gonna give you examples. So live chart examples, trades that I took based on this concept. So this video is gonna help you to determine whether you want to engage with a certain break of structure or you want to let it pass, all right? So without any further introductions, let's just get started. All right, so these are the examples that we're going to use today. Some of them are live trades and the rest is backtesting trades, all right? So let's start with this one. This is a recent example. I believe this was 2 days ago, right? So I want you to take a look at this picture first, read the narrative and the context of each swing point. So basically this is a 5-second chart, all right? This is a lower time frame. The 1 minute time frame is like this. So let me give you an example because I don't have the 1 minute time frame here. So this is a swing point, right? We created a new high right here. So this is the previous swing point that we are looking for buying opportunities here. Remember, this is the 1 minute time frame, and this fraction of price or fractal, this is the SNDR responsible for breaking structure. So when price now is trading lower, we're going to look for trades inside this zone, whether from this SNDR or unmitigated areas here or from the 50%, it doesn't matter, all right? So I just gave you the 1 minute time frame, all right? So let's focus on this one right here. We have put in a low and then a high, right? And then we put in a low and then a high, and then we put in a low right here, then a high, right? So this is a low and a high, and now we put in all right, so this low, and then we have a market structure shift, right? So as you can see, we have a market structure shift because we closed above a protected high, right? Now on this moment, I knew that this is likely not the market structure shift that's gonna send price to make a new high. So if we go here, I knew that this market structure shift that happened here on the SNDR, so this green zone, I knew that it's not the one that's going to send price to here. Now, why is that? The first thing is that we still have a lot of unmitigated zones here. So I knew that price is likely to, it will give us a reaction from this SNDR, right? And also is expecting price to come back all the way to mitigate zones from here, right? So that's the first indication that I knew that this is not the market structure shift that's gonna change the entire trend, this 1 minute, or I'm sorry, this 5-second bearish trend. The second thing is that, as you can see, when we put in this low and then this high, right? And then put in this low, price came back to this zone and mitigate this area. But as you can see here, we have a mitigation of this area right here. And then we put in a new low. And then we put in this high and then this low. So this is now the previous zone. And as you can see, price created a new low, a new swing point without mitigating this zone. So the first sign that I knew that this is not the market structure shift that's going to send price to higher prices is that we still have 1 minute zones that are still unmitigated. The second sign is that we have this unmitigated zone. So this break of structure is likely to only mitigate the zone and then continue lower. So as you can see, I took my trade from here, and my TP was the SNDR of that swing point. So this is a swing point, and this is the area responsible for breaking structure, breaking this low. So that's my TP. All right. Now let me show you another example here. So as you can see, this is what happened. So if you take your trade from here and you are targeting this high, or you are targeting 3R, or this low resistance liquidity, or this equal lows, right, you will get stopped out because you don't know how to read the context. You are simply trading a pattern. Whenever you see an important or protected high get broken, you're going to take your trade and you're going to look for 2R or 3R without considering what price is doing. So as you can see, my TP was at this NDR, and price created a new low, continue lower. So this, what most of traders would call, is a fake market structure shift. No, this is not a fake market structure shift. This is a market structure shift to mitigate this zone only. So not every market structure shift is going to send price to make new highs. All right? So the objective of this break is to mitigate the zone. Now I want you to look closely at this picture. This is the same zone and the same structure, right? So this is the same trade, right? And this was my entry from here and exiting from the SNDR. Now, take a look at what happened next. This is a very, very good example. So we have put in a low from here, right? And then we put in a high, and then we put in a low. Now, we know that this break of structure is only to mitigate this zone, right? Now we created a low here, and then a high, and then we're creating a low all the way to here. And then what happened is that, let me change the color, is that we have a break of structure here. So the same thing that happened here, it happens here. We have a break of structure. Now, what is the difference between this break of structure and this one right here? And would you take this? So if you watched my previous video, you wouldn't take this trade. Why? Because this market structure shift, when price is placed higher, breaking above this high, it already did its job, which is mitigating the previous zone, right? Can you see it? So this market structure shift already mitigates the zone. So when you try to take a trade from here, the objective has already been met of this break of structure, and you will get sold out. The difference between this one and this one is that when price broke structure here, right? When price broke this important high, the zone was still unmitigated. So price gave us an immediate retracement, and I took my trade from here, and my TP was the zone, but not here. Here, when we broke this high, the zone has been already mitigated with this high. So there is no point of taking a trade from here. And as you can see, price continue lower. Let me take a look at another example. Let's take a look at this. All right, so this is a beautiful example, and this is how you can take advantage of the fake market structure shift. So as you can see, this is the higher time frame zone, right? This is the 1 minute zone, and this is the 5-second trend, right? We are bearish, and then here we shifted to the upside, right? And then what happens is that a lot of traders will see this as a market structure shift to continue lower. So this displacement below this low right here. And they are waiting now for that retracement, and they took the trade from here. But as you can see, this leg, this breakout structure, the intention of, or the objective of this market structure shift is to mitigate this zone right here. So as you can see, price left unmitigated zones here. We have this one, and then you created a new high. So instead of taking this short, you will take the long, right? Take the long instead of taking the short. If price broke below this one and didn't tap into this zone yet, right? So it will maybe break this, and then it will give you an immediate retracement. You can take this trade. It's a little bit risky, but you can take it, and your TP is this zone, your stop loss here. But as you can see here, it didn't give us that retracement right away. So it tapped into the zone. Now this is a buying signal. This is not a short signal. This is the ultimate buy signal, right? Now here's another example. We tapped into this 1 minute zone to the left. We don't have the 1 minute time frame, but this is a 1 minute zone. So price, as you can see here, it created, we have this low, right? We put in this low, and then this high, and then this low. So this is now the important or the protected high. We trade above it, closed above this high. So now this is a market structure shift, all right? Now price returned back to the SNDR, or the area responsible for breaking this high, right? And then it created a new high. Now we have this low and then this high. So here we had a market structure shift, right? We had a market structure shift here. Now, do you think that this market structure shift is the one that's gonna change this bullish trend and send price here? No, absolutely not. This break of structure is only to mitigate zones. So we have this zone right here. After price making new high right here, it retraced back. So this is the swing point, and then it closed, and then it traded higher, getting a new high. So now this is the previous swing point, and as you can see, price never mitigated that zone. So this break of structure is only to mitigate the zone, and as you can see, price tapped into this SNDR just like this one. This SNDR is the one responsible for breaking this high, return back to it, and then continue lower. So as you can see, price after closing below this low, it gave you a retracement. So you could have entered from here, but of course the stop loss was too wide, right? And your TP should be just on the SNDR. Price can trade lower, but this is risky. You are gambling right now. You are hoping and not trading with logic. And after this, right? So is that example that we were just talking about. And as you can see, what happened next is that we're creating a new high above this one, right? Here. And then we have what? A pullback. And then we put in a new high. And then we have a break of structure right here. We have a break of structure below this protected low. Now, would you take this trade? Would you short this? No. This break of structure is only to mitigate a zone that has been left unmitigated. So what happens next is that price continue lower after mitigating this zone, right? Let's take a look at another example. Now this one is, I wouldn't consider this as a market structure shift. It didn't take any important high, but a lot of traders will see this as a displacement and they will buy the retracement here, right? But as you can see, the objective of this move is just to mitigate this zone right here, right? All right, so this is an example where I took a loss in, right? So this is, I saw this, so as you can see, this is a higher time frame zone, and this, I believe, is the SNDR, right? Or it is an unmitigated zone inside that zone, right? So maybe like a zone right here. So this is a zone that has not been mitigated yet, right? And I was looking for a reaction from it. So I saw this as a market structure shift, but if this is a 5-second time frame, right? But if we look at the 15-second time frame, this move right here was only to mitigate these zones right here, right? So when price broke below this high, right? This low, I was waiting for the retracement, and that would be the perfect setup, right? I would enter from here and I would target 1-to-1. But as you can see, price didn't give me any retracement and it continued lower, mitigating those 15-minute or 15-second zones. And by the time price traded here into that previous swing point, the objective has already been met, so there is no reason for price to continue lower. And I believe from here, price traded higher, and then so price after this traded higher, right? And then continue lower. So this was just to mitigate zones here to the left and then continue lower. I broke the rules here. I should have entered if price gave me a retracement. Price didn't give me a retracement, so there is no reason to enter from here, right? So this is the last example, and this is the end of this video. And if you have any questions, leave a comment down below or DM me on my Twitter account, and I will answer you as soon as I can. Now, happy trading and good luck.